This is Steve Barton, and thank you for tuning in. We are here for Monday Market Moves. We're going to be talking about the failing banks and how we can profit from it. Okay, big news this week is the continuation of the bank failures. And in short, we're going to summarize here. Silicon Valley Bank has been taken over by the FDIC. Signature Bank was also taken over. Last week, when we reported on Monday Market Moves, Janet Yellen, the leader of the Treasury, said that everything up to 250K in deposits would be covered. After that, it was gone. Well, about 90%, actually over 90% of deposits were over 250K. So since that, about 48 hours after that, they came out and reneged on that. And they said that all depositors would be made whole. And this is a big deal because there's hundreds of billions in there that otherwise would have been gone that is now getting footed, and the Federal Reserve has basically footed this bill. So they're saying it's not a bailout, and they're saying that this will not cost taxpayers a dime, but we're not going to pay this in taxes, but they've increased the currency supply. They've created more dollars out in the system. So in the long run, this is going to cost us in inflation. Let's take a look at the Fed's balance sheet and you'll get an idea of what we are talking about. Okay, so this is a tweet sent out by Wall Street Silver, and you can see here, this is going back a year. This is the Fed's balance sheet. They've been tightening, getting rid of assets off their balance sheet. And then all of a sudden, last week, boom, that's what it looks like when you buy a bank. All right. Now, let's see. Basically, what's going on here is they are bailing out this bank in excess of $250,000 per account. And that's significant, I think, because they're setting precedents. Okay. They're doing the same thing with Credit Suisse. The Swiss bank is bailing them out. Is this a contagion? Is this going to keep going? I think so. I think this is just the beginning. All right. I'm going to share my screen here again, and we will take a look at what happened at a Senate finance meeting that was where James Lankford was grilling Janet Yellen, the leader of the Treasury. All right. I like the way this guy works right here. This guy is no nonsense. Oh, let me share my sound here, and you guys can listen to Janet Yellen.
We start with some of the banking issues we're dealing with on it. Will the deposits in every community bank in Oklahoma, regardless of their size, be fully insured now? Are they fully recovered? Every bank, every community bank in Oklahoma, regardless of the size of the deposit, will they get the same treatment that SVB just got or Signature Bank just got?
A bank only gets that treatment if a majority of the FDIC board, a supermajority of the Fed board, and I, in consultation with the president, determine that the failure to protect uninsured depositors would create systemic risk and significant economic and financial consequences.
So what is your...
Okay, so if your little bank is worth saving, that is determined by the FDIC and this lady, Janet Yellen, and the president. And if they determine, if a supermajority of that committee in that boardroom decides that that bank is worth saving, then it'll be saved. And what they're talking about depositors over 250K. So if you're a high net worth investor and you have more than that in a bank, then this concerns you. If you have less than that, your deposits are secured. Now, I understand most of the people listening to this have deposits under $250,000 in their bank in each account. But what this is going to do is this is going to create a monopoly on the banking system. This is going to cause big banks to buy up small ones for pennies on the dollar, and we're going to have a monopoly of banking systems. Less competition, means less good for the general people. All right, here we go.
Your
We made
plan,
that determination.
right. So what
these
is
two
your
banks.
plan to keep large depositors from moving their funds out of community banks into the big banks? We have seen the mergers of banks over the past decade. I'm concerned you're about to accelerate that by encouraging anyone who has a large deposit in a community bank to say, we're not going to make you whole, but if you go to one of our preferred banks, we will make you whole at that point.
Look, I mean, that's certainly not something that we're encouraging.
That is happening right now.
That is happening because depositors are concerned about the bank failures that have happened and whether or not other banks could also
No,
fail.
it's happening
And
because you're
it's-
fully insured no matter what the amount is if you're in a big bank. You're not fully insured if you're in a community bank.
Well, you're not fully insured. And
You
big-
were at Signature, and
the
it just barely met that threshold. You were at Signature.
Well, we felt that there was a serious risk of contagion that could have brought down and triggered runs on many banks. And that's something, given that our judgment is that the banking system overall is safe and sound, depositors should have confidence in the system.
Okay, we should have confidence in the system. All right, I feel monumentally reassured there, don't you? Okay. This is what President Biden had to say on it. Let's listen in here.
Protect American jobs and small businesses. Look, the bottom line is this. Americans can rest assured that our banking system is safe.
It's safe.
Your deposits are safe. Let me also assure you, we will not stop at this. We'll do whatever is needed. On top of all that, let's also take a look a moment to put the situation in a broader context. We've made strong economic progress in the past 2 years. We've created more than 12 million new jobs, more jobs in 2 years than any president has ever created in a single 4-year term.
Okay, well, economic stability and jobs. Let's go ahead and take a look at something else here. This is what he's talking about. Okay, this is the red line here is unemployment. So we can kind of think of the reverse way to think of that is how many people are employed. This is how many people are not employed, right? So right now, the government is reporting, the red line is what the government's reporting, is that there's about even less than 4% unemployment, saying that 96% of eligible workers are employed. Now, the problem with this is once you are not employed, once you've been unemployed for a year or longer, you're considered a discouraged worker. And we learned that from John Williams of shadowstats.com. He came on the show and taught us this. And he counts these discouraged workers. And if we count that into the metrics, 1 out of 4 people, 25% unemployment. Okay, think about that for a second. So the actual unemployment rate is 25% because the government is not calculating those people. All right. And then what Biden says is they've created 12 million jobs, more jobs created than any president in history. What he's talking about is before he came into office, the government shut everything down, told everyone that they had to go home, and they locked themselves in their houses because it was illegal to do anything otherwise and go to work, right? God forbid you're a hairstylist and you go cut someone's hair. That's illegal, right? During that time of the lockdowns. Well, once everything opened up again, he's counting all those people going back to work that would have been working anyhow. He's counting that as 12 million jobs created. No, those jobs are already there. You forced them not to work. Okay, now that we got that in perspective, let's continue.
Unemployment is below 4% for 14 straight months.
4% if you
Take-home
don't
pay
count
for
people that
workers
haven't
is
been working
going
for
up,
a year.
especially for lower and middle income workers. And we've seen record numbers of people apply to start new businesses, more than 10 million of them, more than 10 million applications over the last 2 years starting businesses. Now we need to keep the program, this progress going. That's what swift action that my administration over the past few years is all about. Protecting depositors, protecting the banking system, protecting the economic gains we've made together for the American people. Thank you.
All right. Cool. Okay. Well, I got a couple questions. How about you guys? Let's line up for
God
these.
bless you, and may God protect our troops. See you in California.
Mr. President, what do you know right now about why this happened? And can you assure Americans that there won't be a ripple effect?
Do you expect other banks to fail, Mr. President?
Should all depositors be protected at all banks?
All right, thank you, everybody. In-town travel.
Right. Well, that was enlightening. I feel a lot better about our banking system now, don't you? Okay, good deal. Basically, what we could get from this. Oh, whoops, sorry about that. There we go. Rest assured, rest assured. Okay, we can take all these down. All right. So essentially, what we're getting from this is that you got to do this yourself. Okay, we got to protect ourselves first and foremost. Physical position in gold and silver. All right. After that, we can make a lot of money, I believe, during this economic uncertainty by leveraging that on the miners. Certainly now is a good time to take out some paper cash. You know, if you got some extra digits in your bank account, just take that out in the form of paper cash. The banks don't have any cash. I think that's a really, really, really good bet right now. Another thing I've been getting a lot of questions about is T-bills. Okay, these are Treasury bills. So a T-bill is it's essentially a bond, but they call it a T-bill, a Treasury bill. And that is a duration of less, about a year and less. And then a bond is a year or more in duration. Okay, so what's kind of neat about these T-bills is if you go to treasurydirect.gov, you can link your bank account there and you can move some currency over to the Treasury, which has zero risk of default, because they will simply print more. Okay. And what they do is right now they're paying around 4% a year for these T-bills. So you put them in a 4-week, 8-week, 17-week, whatever you want, and you put this on a rolling basis. And now what's happened is instead of keeping that currency in your bank account and getting 0% interest rate, now you get 4 or even a little north of 4 right now. Depending on the duration, right? If everyone did this, banks would actually start paying you a little bit of interest to keep your money in the bank account, right? But because no one does this, they can get away with paying you 0, right? So if everyone did this, we would actually get interest on our bank accounts, but nobody does this, so we get 0, right? I think your money would be safer there than it would be in a bank account. You know, if you got more than 250K in the bank account, you could start putting it in like a brokerage account. Those have SIPC insurance, then you're insured up to $250,000. So open up a bunch of these accounts and then you'll be insured up to that. All right. So that's T-bills, brokerage firms. Okay. All right. Let's go to the charts. How can we actually make some money from this? Okay. We're going to take a look first at the S&P 500, see what it did over the last week. And we can see we've been talking about this 200-day moving average, and it broke below that. And what was kind of significant about Friday was on Thursday, it closed above the 200-day moving average. But what really kind of matters is whether the week closes above it or not. And it did not. It broke down below the 200-day moving average. With everything going on with the banking crisis, I think that it's more likely than not that this is going to trend down. Long term, long term meaning for kind of the rest of the year, I really see this going down to like 3,300, possibly even 3,000. So not liking the S&P 500 much at all. Now, let's see how gold reacted to all these bank failures. This has been extremely impressive. Since we hit that double bottom in gold just about a week and a half ago, I mean, this has just moved up 10%. It's really, really impressive. And what's impressive about gold in this, as far as the technical level, if we go to the weekly chart here, I learned this from Jordan, our resident gold expert over at the Daily Gold. is it closed the week at 1989. Looking at other charts, it was 1988, but that's semantics. Now we need to look and see when was the last time it closed above this level in the weekly. Okay, so if we zoom in here, the last time it was at this level was in March of 2022. Okay, so a year ago. And the time before that was in August of 2020. Okay, so this red line dictates the all-time high, which is around 2,075, just shy of 2,100. And we've only broken that in the weekly a few times. But as far as closing in that, in the weekly time frame, that's only happened once, and that was back in August of 2020. Okay, right here in August of 2020, it closed above the line where we're at now. So gold, in the history of its existence compared to the US dollar, has only closed in the weekly above this level one other time in history. We are very close to touching the all-time high, and we'll see if we get there. We shall see. Silver's been interesting. Okay, so we got this trend line here. I'm going to bring back up the daily chart. And we can see, oops, now I'm getting all jacked up here. There we go. Okay, this back. There we go. Super professional. Okay. We can see this trend line right down here. And just a few days ago, we were down around $20. We're all the way up to, it closed 22.59 in silver. We busted through the 200-day moving average. So now we have that as support below. Both of these were a little bit overbought, especially with all the action on the banking crisis. We'll see what happens over the weekend here. But basically, silver slammed through that. Still think it's a good time for a physical bet, but the time to make the physical bet was last week and the week before, because I've checked the premiums now and they've gone up since silver's gone up, that sentiment. But hopefully you guys got your physical bets in last week, and also the bets on the stocks, because those turned out quite well. Might take a little profits this coming week, depending on what the action looks like. But yeah, the metals are pretty exciting, and it's nice to see them decoupling from the stock market and acting on this new information with the banking crisis. When people have concern about the purchasing power of the currency, people first rush into gold and then they rush into silver. All right, GDX and GDXJ placed a couple bets in the gold market, placed one on GDX and then another one on GDXJ, and we will see how that irons out. But got a couple of bets in there. Again, it's a little overbought, kind of high on the RSI and MACD, but so we may take a little bit of profits that. If it looks like it's going to reverse, we'll be watching that down in the minute time frames. And if they are, then we'll take a little profits. Okay, uranium. Uranium has been interesting because it's kind of been following the broad market, and it fell after with the market as it's been falling. So we purchased some URNM, the Uranium Miners ETF from Sprott, got that a little south of 31, and then had a limit order on two ETFs, URNM and URA, and also one on UROY, the Uranium Royalty Corporation. And for whatever reason, they didn't hit. So I don't know. Maybe I shouldn't have clicked the fill or kill button. So essentially, it's got to fill the entire order or it doesn't get filled. Maybe that was a mistake on my bad. Maybe I should have just, allowed the order to fill as it could. But anyways, that's what these blue arrows dictate, or limit orders. These red dictate that they filled. And unfortunately, they didn't fill. Hopefully I'll get another shot. Maybe this banking crisis will help feed uranium to go lower. Perversely, I hope that it does go lower so I can get more cheaper. But we'll see. Same thing with UROY. That one also didn't fill. That was a little disappointing. Bets that really worked out, especially in the silver sector, SILJ, the junior silver miner ETF, got in, could have got more on this double bottom here, but didn't purchase. And yeah, I got it at 950. It's up to almost 1050. That's a great little run right there. SILV, Silvercrest. Awesome company. You know, can't wait for them to get up to commercial nameplate production, but we shall see. Then TLT, our bets in TLT are looking pretty good, especially with this banking crisis, hitting along the 200-day moving average, hoping it can kind of sustain above that, then that'll act as support. But really the fundamentals on this one are what's guiding that. Our bet on platinum. I've been a little apprehensive of placing more bets on much more commodities other than gold right now. Gold's the obvious bet with the banking crisis. But I mean, technically, this is starting to look pretty good. If we can get a couple of bounces here along this 200-day moving average, I mean, technically, this would look like a great bet. But I'm a little afraid that with the current situation, that commodities are going to get drugged down in the coming recession. Same with copper here. We did get our copper bet in, took out our limit orders. We'll see how this shakes out. We're having Rick Rule on the show on Tuesday. And so he's got a battery metals conference coming up. So electrification, you know, we'll be able to ask him a lot about copper on Tuesday. So if you got any questions for Rick Rule, put them in the notes below. We're also having Justin Hune on the show on Monday. So if you have any questions about uranium, put those in the comments below and I will ask them on the air. One that I've been looking at and kind of following here, and I want to get Rick's opinion on it before I pull the trigger, but I'm looking at oil. So this is Blackstone Minerals. It's an oil royalty. As of now, their dividend is like 11 or 12%. I mean, it's pretty incredible. This company just seems to be swimming in cash, as Rick would put it. Here's a common oil ETF, XLE. And technically, this is looking kind of good. I mean, there's a lot of resistance right around this level. I mean, I guess it would be ideal if it came down here a little bit more to like $70, but I'm getting kind of interested in oil now. Crude's down to like $66 a barrel. So we shall see. RSI is pretty low. MACD's looking interesting. We'll see what happens with oil here. But that's what we see for coming next week. It'll be really interesting to see what happens with the banking system and with gold. And I hope you guys got something out of this. Support the show, hit the thumbs up, the like, little bell notification icon, and I will talk to you next time.